What is arbitrage in cryptocurrencies? Crypto arbitrage is a strategy where a trader makes money off the price difference of the same asset on different exchanges. If Bitcoin is $27,000 on Binance and $27,200 on Bybit, the trader buys on the first and sells on the second, taking the difference. That's arbitrage. Analogy. Imagine that oranges cost 100 on one market and 120 on another. You buy a box where it is cheaper and resell it where it is more expensive. The difference is your profit. Why is this possible in crypto? In traditional markets, stocks, bonds, arbitrage hardly ever works because prices are synchronized. You're watching the Blockoria channel, where we make the complex understandable with analogies and examples. We appreciate your time. Subscribe so you don't miss out on new helpful videos. But in crypto, there are multiple exchanges with different liquidity and user bases, different jurisdictions and regulations, slow pricing algorithms, high volatility. All these factors create price gaps that can be exploited. What are the different types of arbitrage? Inter-exchange arbitrage is the classic form. You buy an asset on one exchange and immediately sell it on another. It requires quick reactions and capital on both platforms. Intra-exchange arbitrage, used within a single platform when different trading pairs show different prices. Triangular arbitrage, more complex but more interesting, involves three trading pairs. Arbitrage between CEX and DEX, when the same token has different prices on a centralized and decentralized exchange. Who does this? Professional traders with bots and automated algorithms. Funds with access to large liquidity pools and APIs. Regular retail traders who have accounts on multiple exchanges and fast hands. But it's important to understand that the more capital you have, the higher the chance of executing arbitrage without slippage and commissions. What are the risks and limitations? Commissions eat into your profits. You need to factor in commissions for buying, selling, and transfers. Transaction delays. While you're transferring assets between exchanges, the price may change. Slippage. The price may change at the moment the order is executed. Blockages and limits. Some exchanges may restrict withdrawals or freeze funds. Analogy. It's like carrying a box of oranges to the neighboring market, and on the way, the bridge suddenly closes. Interesting arbitrage strategies. Smart bot arbitrage. Bots that track all pairs and act faster than humans. They are customized for specific exchanges and strategies. Stablecoin arbitrage. On sharp fluctuations in USDT, USDC, you can catch deviations from $1, especially during news or bans. Cross-regional arbitrage. A token may be more expensive on an Asian exchange than on a European one. The difference can be up to 1 to 2%. Why is arbitrage becoming more difficult? The market is maturing and technology is evolving. More and more competitors are using bots, and opportunities are closing faster. In addition, exchanges synchronize prices through market makers. The price difference is getting smaller and smaller. Arbitrage today is not just about buying low and selling high. It's almost an algorithmic war. Top 3 mistakes beginners make in arbitrage. Ignoring commissions. Many trades look profitable only before commissions are taken into account. After calculation, it turns out that you are at zero or even in the red. Slow actions. While you manually switch between exchanges, the price window has already closed. The market works in milliseconds, working with only one exchange. Arbitrage is a game of differences. If you don't have access to multiple platforms and don't keep liquidity in 2 places at once, you are limited. Checklist for getting started in crypto arbitrage. Register on 2-3 exchanges with different geographies, e.g. Binance, Bybit, KuCoin, and MMEXC. Familiarize yourself with the fees and limits on each exchange. Set up a notification system or use arbitrage bots, e.g. Arbitrage Scanner, Bits gap. Practice with small amounts. It is important to understand the mechanics first. Keep track of each trade and its profitability. Even minimal losses multiply over time. Is it possible to make money from arbitrage in 2025? Yes, but you need to be prepared. Have capital on several exchanges. Work with bots or react quickly manually. Take into account commissions, spreads, and transfer times. For beginners, arbitrage can be a good way to understand market mechanics, but don't expect easy money. It's all about speed, calculation, and discipline. Crypto arbitrage is one of the most logical but technically complex ways to make money in crypto. It requires quick reactions, knowledge, tools, and an understanding of how prices move. Want to try your hand at arbitrage? Write in the comments which exchanges you work with, and subscribe so you don't miss out on trading strategy guides. Thank you for watching Blockeria. Our goal is to make the world of cryptocurrencies easier to understand in order to accelerate its development. With your support, we will be able to create new high-quality videos, making crypto education accessible to everyone. If you like our project, support us by donating. It's an investment in your knowledge, and the world of the future will be better. We're happy to share our partners' referral links with you. By using these links, you may receive bonuses, prizes, and commission discounts.